Reserve Bank will today tell us what the OCR is going to be, the monetary policy statement. The committee has met. Right now it is 2.5, well 25 basis points is what we're expecting to come off. That would take us to 2.25%. It's a call that will shape mortgage pressure, business confidence and the pace of our economic recovery. Brad Olsen, Chief Economist at Infometrics, is with us this morning. In Japan, Brad, what time is it there?
It's early morning, but look, on Reserve Bank Day, you've got to get up and understand what's happening in the economy. It's a big one given it's the last one for the year. The Reserve Bank won't be meeting again to look at interest rate setting until early 2026 with a new governor in place at that point. So this decision at the end of November is always an important one for the New Zealand economy, ever more so this year when you've got the further cut expected, but also a question of just how much the Reserve Bank leaves the door open to a potential further cut in 2026 if the economy still needs stimulus. But look, a big question, I think, more about the future. We're pretty certain around today's views. We know the Reserve Bank is likely to cut, as you say, by 25 basis points. If they didn't, the financial markets would probably go into a tiz, but it's more what that sort of future pathway looks like, and we'll be watching and waiting, trying to understand what those clues are from the Reserve Bank.
I think it's very impressive for you to be up at 2 a.m. in Japan with us this morning. Hey, do you think, in terms of the longer term fixed rates, have we bottomed out on those now?
Well, I think it's interesting, right? I mean, the last time that we had a Reserve Bank decision, you saw most of the retail banks that moved sort of in the week or so before the decision, preemptively sort of cutting some of their fixed rates and similar. You haven't seen that as much this time. I haven't noticed the major banks that have really been going out there and promoting further cuts.
Is it priced in?
Well, effectively, yeah. We've already sort of seen that anticipation come through much, much earlier. And I think that's also, there's a little bit of a compromise here where you've got retail banks, you've got, us independent economists, just making that cautious sort of point that the Reserve Bank is deliberately now trying to stimulate the economy, right? They've been outright and said they've pushed the OCR below neutral. They want to jazz up the economy. Now, I'm no doctor, but as I understand it, once you add the defibrillator to someone, you don't hold it there for the next 5 years. You at some point have to remove that stimulus and move back towards sort of trying to manage the economy in a more neutral and natural way. So there is, I think, still this challenging question for retail banks, for households, for businesses to go, yes, we need a shot in the arm at the moment, but some of these interest rate cuts are only going to fully impact over the next 12 months or so. And realistically, there's still a good chance, I think, that we could be sitting at this time next year talking about interest rates going up. Not massively, but just back towards that more neutral zone. So again, that balance of how the Reserve Bank communicates that the economy needs a shot in the arm at the moment. You are seeing some economic recovery, but also we're not going to be in this state for absolutely forever.
Brad, appreciate your time this morning. Thanks for being with us. Brad Olsen, Chief Economist at Infometrics.